Hello, everyone. My name is Chad Hart. I'm an extension economist with Iowa State University. And here within the month of August is when USDA really starts to make substantive changes to their projections as we look forward to harvest this fall. And they did that again with the August WASDE and crop productions reports that we received earlier this month. And I want to walk through those numbers to show you what USDA ended up showing us in terms of not only production for this coming year, but as we look forward for how we're going to utilize these crops over time. In this case, USDA's updates showed, let's call it mixed signals, depending upon which market you were looking at. For the corn market, they did actually come in a little better than expected. We knew the crop was likely to get larger, but there were some reasons for optimism that came out of the report. Mainly the numbers I want to talk about are in that 2024 column you're seeing here on the far right-hand side. When USDA looked at the corn market, what they found was that corn plantings were actually a little smaller than first anticipated. They ended up lowering that estimate to 90.7 million acres being planted this year. That's down about 700,000 acres. That helped partially offset what we found on the yield side. Here in August, the yield estimate mainly comes from a survey of farmers asking them, what do you think your expected yield will be this coming fall? And what we found is that farmers are telling us that this is a big crop. USDA ended up raising that yield estimate up by over 2 bushels to where it now stands at 183.1 bushels per acre. When you put all that together, what it ended up doing was adding about 47 million bushels to production total. So we're now still north of 15.1 billion bushels of corn. So we're looking at a great big crop, record yield, but not quite a record crop because last year's crop was still bigger in terms of total bushels. But the idea is lots of supply. Now, when you look down at the demand side of the market here in the gray box, again, it was mixed. What USDA did was they increased corn exports by 75 million bushels for 2024, but they ended up lowering the food, seed, and other. And this is mainly a 15 million bushel reduction in the use of corn for sweeteners because that is an industry that has been declining slowly over time. But as you look at total use, that ended up going up a little bit. And so we're now looking at 14.965 billion bushels being utilized there. But the issue is production is still larger than that use. That means ending stocks continue to build here. In this case, the number is staying north of 2 billion bushels, and that puts downward pressure on prices. So USDA ended up lowering that season average price estimate for 2024 by 10 cents to $4.20. Now, as we look at the soybean market, what we found there was some of the area that couldn't go into corn and couldn't go into wheat did end up going into soybeans. The planted estimate went up by 1 million acres. The yield estimate went up by 1.2 bushels per acre. So you put that combination together, you ended up adding about 154 million bushels to the production total here. So we're looking well north of 4.5 billion bushels of soybeans being harvested this year. So again, plenty of crop to work with. In this case, you're looking at not only a record yield, but record number of bushels, record production. On the usage side, we did see some positive movement, but not nearly enough. Crush, they left alone at 2.45 billion bushels. When you're looking at seed, they increased that by 4 million bushels. When you're looking at exports, they ended up increasing that by 25 million bushels. But all in all, again, usage going up, but not nearly enough to catch production. And so we're looking at ending stocks for the 2024 marketing year at 560 million bushels. That is roughly 215 more than what we're going to leave this marketing year from. And it's you know, basically double what those stocks were coming out of 2022. So with those building ending stocks, prices again continuing to be pressed downward. USDA lowered their season average price estimate by 30 cents to $10.80 a bushel. In looking at those record yields across the country, what we found is it's the heart of the corn and soybean production areas that really came through strong this year. There are 10 state records to go along with the national record in terms of corn yields. Iowa being one of them here with a expected production right 209 bushels per acre here, but Illinois came in at record, Indiana, South Dakota, Nebraska. Like I say, a solid production year across the Midwest. The Southeast did take a step back from last year's records down there, but all in all, the losses from the Southeast were more than made up for by the gains we've seen here within the Corn Belt. And you see that same sort of pattern when we're looking at soybeans as well. Didn't set a record here in Iowa yet. We were estimated at 61 bushels per acre, but Illinois and Indiana again coming in with record soybean yields as well. So we've got incredible supplies projected coming to the markets within a few weeks here as we look towards harvest. And it wasn't just seeing these big crops here in the US that sort of continue to put the pressure on us as well. We still have a lot of corn coming in from the rest of the world as well. In fact, as we look at the world situations, it's again mixed. Corn, those numbers came down a little bit this month, but the idea is not in major areas that we would like to see here. You can think our competition, Argentina, Brazil, their numbers held firm this month compared to last month. Where we did see some of that reduction is mainly around the Black Sea region, Ukraine, Russia. We do see a smaller corn crop coming out of those areas. Hopefully, that will open up some more export opportunities and may be part of the reason why USDA ended up increasing corn exports as we're looking forward for the 2024 marketing year. Case of soybeans, not only did our crop get bigger, but so did the crop outside the U.S. as well. In fact, as you look here, I want you to look towards that, I guess I'll call it the fourth column. It's the second blue column on the chart here, and it shows as U.S. production increased by 4 million tons, we also saw about a 3 million ton increase outside the U.S. So there's going to be plenty of soybeans available worldwide to fill the export potential, and that's going to be a challenge as we look at trying to rebuild soybean exports. And looking into that data, we're not looking strong right now. When we're looking at advanced sales for the 2024 crop, they're running not only behind last year's pace for soybeans, but they're running well behind the average we've seen over the last 5 years. Now, that could change dramatically as we get into harvest. As the graph, the average line there in black shows, our export sales tend to dramatically ramp up here over the next several weeks as customers out there take advantage of our what tend to be lower priced beans right around harvest time. And that could help jumpstart our export sales for soybeans, but we're also going to need that same thing on the corn side. Now, with corn, we're running below the average, but we've at least maintained with last year's pace in terms of export sales. But again, USDA is showing this growing beyond the pace of sales we had last year. And so we will need to see those sales starting to kick in. Key market to watch here, or actually a few key markets. Mexico has been fairly aggressive, at least early on, in terms of buying some 2024 new crop corn. The other places I'm going to be watching here are down in South America, especially places like Colombia, which have developed into a strong export market for corn over the last few years. It could be a place where we need to be watching for those advanced sales. But as we get right down to it, the markets saw this as sort of, like I say, sort of a mixed bag for corn, and where we went up right after the reports, but then we've been working our way back down again. And I think it's the fear of just how big these crops could be as we're looking forward here. As you look at where the futures market is settled out now that we've gone about a week past the report, where USDA has estimated a $4.20 season average price, futures right now are pointing to something just a little south of $4. So the markets are definitely more pessimistic right now than the USDA projections. As we look forward for the 2025 crop, though, you can see that we do have that, I call it the slope of hope. where we do have prices ratcheting their way up based upon that building growing usage that we see out there for corn. And that takes that 2025 season average price estimate up to around $4.30. So the thought, at least the market has right now, is that, yeah, we're searching for that bottom and then we'll slowly start to climb our way out as we look towards next year's crop. The challenge for soybeans is that wanting to do the same thing, but it's a little bit deeper hole when it comes to the financial situation for soybeans. USDA's estimate for 2024 crop is $10.80 a bushel. Right now, the futures market's pricing more in the low nines as you look at their 935 right now. And you can see that it remains in single digits as we look out to the 2025 crop, where we're staying south of $10 for that season average price estimate, reflecting not only the large amount of soybeans we've got coming here within the US, but just the large global supplies that have come in not only this year, but over the last few years. So we are well and truly into the downward phase of this next ag cycle here. At least on the crop side, we are seeing significant declines being reflected not only in pricing, but in net farm income. The challenge here will be finding those levers that can turn this ag cycle back around. One of the things that gives me a little hope is that at least when we look at the usage side of our crop markets, they are in pretty good shape. In corn, we're looking at record usage right now. Soybeans, not quite a record, but building its way to it. And that can help support prices. And that's sort of what you're seeing reflected as we look at futures for 2025 being a little better than what we're seeing right now. Well, that's the outlook as it stands today with what USDA produced here. As we're looking forward in this crop, we'll start to see in September USDA work in what they call their objective yield survey, where they actually send enumerators out into the fields to look at the crop and create some data that way to massage into the yield estimates. And we'll continue to see refinements on the usage side. Well, with that quick update, again, my name is Chad Hart, Extension Economist with Iowa State University, and thank you for the privilege of your time.